Now, in this example, we're going to look at return on investment, but the investment cost increases. It goes from $500,000 to $600,000. So just at a quick glance, we're going to look at that formula, and we're going to notice that the formula on the right-hand side, that lower investment went from $500,000 to $600,000. So overall, let's just read through the whole formula very quickly here. We have the ROI is $50,000 divided by 2 million multiplied by 2 million divided by $600,000, and that equals 8.33%. Also, if you just took $50,000 divided by $600,000, it's going to get to 833%. But when we break it down into two formulas here, we can see we get more information, we get more insight. And as I just said from the previous example, when the investment was $500,000, we had a 10% ROI. Now it goes up. We know that investment cost goes up. We can see what changes in the formula, and it actually lowers the return on investment to 8.33%. And also with the two formulas, we also see what side of the equation changes. So maybe those net sales of $50,000, maybe that goes down, maybe that goes up, and we would be able to figure out what the change is, maybe from year to year, from maybe one geographic division of the company to another. It just gives a better insight into what actually is the return on investment. And just as a recap, we're just going to go ahead and wrap this up here. And it's always better, if you're learning this concept and it's new to you, is to repeat. So once again, the better formula for return on investment is simply net profit divided by sales multiplied by sales divided by the investment. And going to recap, what is the concept of ROI? So remember once again that return on investment, it's a measurement tool to determine how well a company is using its investments to generate a profit. So you definitely, if you're going to put capital budgeting and forecasting and spending a lot of money out there to help grow your company, you want to make sure that you're choosing the best projects, you're choosing the best investments to get the highest profit margins for your company. And remember that ROI evaluates the net profit, we look at sales, and we look at the investment. And once again, remember that ROI can be used to measure multiple avenues here. So it can measure a specific period of time. You can compare that to other similar periods of time. It can be year over year. It can be trailing 12 months. Management within a company can use it maybe to compare one division of the company to another, maybe one geographic region of the company compared to another, etc. So there's multiple uses for looking at ROI. Now that takes us to the end of this topic, Return on Investment, ROI, by Dr. Melissa Cohen. Thank you.